Hey everybody, today is July 22nd, 2024, and today we're going to talk about the stock market and where I see the stock market headed towards for the month of August. Before we begin, please read the disclaimer. You can pause the video as you read it. Okay, so I'm still coughing a little bit, so I do apologize if I cough once in a while in this video. But basically where we left off was, last time we left off around this area, right, in late June. And I basically said that overall, I'm very bullish on the market because we are making higher lows, higher highs. We're staying above the moving averages, and I expect this to move up higher, right? But I also caution that even in a bull market, it's healthy to have some pullbacks, right? You see this is a weekly moving average. You'll see that once in a while we're going to have some pullbacks, right? Sometimes to these longer-term moving averages. Excuse me. And it's perfectly healthy, right? In fact, it's actually what you want to see to make the trend much more sustainable. Usually when the stock market moves too quickly, we tend to have like sort of like a violent reaction, like sort of like a rubber band snapping back, right? And I think that's what we saw with the pandemic. We crashed very quickly and then we recovered very quickly too. But with all the stimulus, we printed a lot of money, and so inflation went up. So we had to raise interest rates, right? The Fed rose interest rates to record highs within the last 20 years. And that caused the market to pull back a little bit. But we ended up pulling back to the 200-day moving average, which again is a healthy long-term pullback. And so since we've not only moved out of that, but we're basically going up to new all-time highs in price discovery, right? So the question is, where do I look? Where do I see the month of August looking like? And so far, I'm pretty optimistic. If you look at the one of the major things that we've been talking about over the last 2 years is interest rates, right? The Fed had to raise, like I just said, raise interest rates to combat inflation, right? Record inflation, 20-year high inflation, right? The problem was earlier this year we all thought there was going to be multiple rate cuts. The problem is that the inflation rate CPI report said that we actually were increasing throughout the first couple months of the year, right? And so this really put a damper on our expectations, and people started to think that maybe we're going to get less rate cuts this year, right? And so it wasn't until April that we started to see a trend coming down, but also said that we need to see multiple data points. We can't just see one or two, right? So we got what we were looking for in the previous CPI report earlier this month, which is that the June inflation CPI report said that we're finally confirmed downtrend, right? So we sort of like had a bounce up to 3.5 after coming down to 3.1. And so now we're coming back down to 3.0, right? Which is really good because the Fed, their target rate is 2.0, right? 2%. So the fact that we're getting to 3, and we haven't been below 3 in a while, right? It's been, a couple of years since we've been below 3. So the fact that we're at 3 now, and perhaps are we going to finally go below 3 in August? And if that's true, the August 14th for the month of July, right? And if that's true, then it's possible that we'll finally get a rate cut this year, right? People are saying that we're probably going to get a rate cut in sometime in fall. So the fact that we've seen inflation come down, it's giving us a positive signal that perhaps we're going to finally get the rate cut we've been looking for, probably in September, right? One of the fall months or end of September, right? And right now we're at 5.33, right? Excuse me. And you can see that the last time we were this high was, about 20 years ago, right? During 2005, 2014, right? Before we had the financial crisis, right? Now, also notice that when they start to lower rates, we tend to have a recession. So are we going to see that this time, right? Even here when they lowered rates, we had the COVID recession, right? So once they start lowering rates, are we going to see a recession? And how will that affect the stock market, right? History shows that this tends to happen, right? Whenever rates are cut, we tend to have a recession that falls. So that's something to look out for, and we'll definitely update you as the price action develops going forward, and if the Fed does end up cutting rates, right? So overall, looking at the price action, this pullback, we've had a recent pullback over the last couple of days, which is healthy, right? If you look at the RSI, you'll see that we were overbought, right? Let me just zoom in the RSI really quickly. You'll see we were overbought in this over 70, right? And so it's healthy that we're pulling back to neutral right now. And that's sort of resetting the oscillators a little bit to give us more room to run up higher, right? Also, we're not too far above the moving averages. It's healthy to pull back once in a while to the moving averages like we saw in April. We went down, broke below the 50, but held the 100-day move, right? We definitely want to hold the 200-day as the more important moving average for the daily chart. But the fact that we're coming down and holding at least the 100-day for now is healthy, right? So, excuse me. So anyways, for the month of August, I am predicting that we probably will continue to go up higher after this slight shallow pullback. However, a lot of it is going to hinge on what we see in August 14th, right? We definitely want to see inflation come down below 3%. That's going to be a really great green light for the Fed to finally start cutting rates, probably in September, right? If that happens, I can see this thing pushing up higher. But again, remember what I said. When we cut rates, it tends to be followed by a recession. Now, that doesn't mean it has to be as bad as, let's say, the financial crisis, right? Yeah. Sorry, yes. So this is the right chart. Okay. It doesn't have to be as bad as the financial crisis, right? When we cut rates over here. Yeah. Because remember what we saw in COVID, we had a very shallow, we had a shallow recession, right? When we cut interest rates, but we've quickly recovered, right? But we also printed a lot of money, which caused the inflation rate to go up higher. So now we're finally seeing inflation come down. We're cutting rates now. So it's going to be very interesting to see how the market takes that. Will the market continue to go up high? Because this is something that we've been expecting for a while now. Or has the market priced that in? And are we going to see a recession and see the market pull back a little bit, right? Another thing to look at, and I've been kind of coming back to this chart in this video, is that we have a yield curve, right? And it's been inverted, right? And so it's been like this for a long time. The last time we saw that was like in the 80s, right? And usually when the yield curve uninverts, it's followed by like a recession as well. This is shaded area, right? So that's also another thing that could happen, right? Will the yield curve uninvert and will we get another recession? Last time we saw some COVID, right? Again, and this is pretty accurate, right? But then at the same time, the last time we've been uninverted for this long, right? Usually it's pretty shallow, right? It doesn't last that long, but we've been uninverted basically since 2022, so over 2 years now. Last time we saw something was in the 80s, and we know that the market, after we uninverted, had this massive run from the 80s to the end of the 90s, right? So maybe we'll have a shallow recession where the market pulls back a little bit and then followed by a monster rally, perhaps, right? And then you have new technologies like AI, generative AI, stuff like that, acting as a tailwind to push the market higher, right? So, but that's long-term view. Short-term view, like I said, I expect us to hold this level and push up higher. But again, a lot of it is going to depend on what comes out on August 14th. Hopefully we see this come down below 3. If it does, I do believe that in the short term we'll push up higher. Of course, in the long term, we want to be cognizant of historical trends when the Fed tends to start to cut rates. And like I said, if interest rates do come down and the market does rip up higher, because it anticipates that the Fed is going to start cutting in September. Remember, when the Fed starts cutting, it increases the chance we're going to have a recession. Historically, that's what's happened, right? Also, look out for the yield curve, right? 2 and 10-year, right? When they uninvert, we also follow by a recession as well, right? So just something you have to look out for. Of course, I'll definitely update you as we have more information coming out. And definitely next update, end of August, and we'll see if the inflation data starts to come down, and we'll see how the market reacts going forward. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.